please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. 10,315 is what we have on the SGX Nifty at this point in time. Keep in mind that, of course, is the futures rate, and we are still pretty nascent in the series, so there's still a bit of a premium. Let's see how we start. Ashwani Gujral, Sudarshan Sukhani and Mitessh Thakkar now join us. Good morning, gentlemen. Ashwani, we had a decent close on Friday, in fact, especially for the bank Nifty. Thoughts on the market from here on? What's the first trade?
Well, good morning. And Friday was a narrow range day. Now, had we opened 80 points lower, like SGX was suggesting earlier, you could have gotten some follow through on the downside. Now it looks like we are going to open inside Friday's range. So whenever that happens, there is fairly limited opportunity unless we start breaking the previous day's range. So my sense is probably first half will not do too much, and then in the second half, based on news flow, etc., if there is any, you should take a direction. But the breakdown that was being anticipated based on Friday's action on Wall Street, that may not happen early in the morning.
Okay. Morning, Ashwini. So the contours for both the indices, Nifty and Nifty Bank?
See, the contours is that given that all markets are moving up, in case we start breaking Friday's high, and that was probably closer to 10,376 on Nifty futures and 24,975 on the bank Nifty futures. If we start getting past that zone, then you should expect follow through and further expansion to come in. Till that happens, you could probably be range bound at best.
Okay, good morning, Sudarshan. How do you read the picture, and what would be the trading bias? Is there anything you have in mind right at the open?
Yeah, good morning. Well, the picture remains upbeat, which means we are in a mildly bullish trend, and that trend is continuing. Now, after a reasonable rally, markets consolidate, and Friday was a sign that markets are consolidating. We don't know when that consolidation will end. It could easily end today or probably continue for a couple of more days. But since the trend is up, traders should be positioned only on the long side of the market. If you haven't got a long position, then take one either at the open or sometime before 12 p.m. Just buy it whenever you feel like. Your stops in Nifty futures are 10,240 and a possible target of 10,450. That's for the Nifty. The Nifty Bank is a better buying opportunity. The same rules apply. Buy it, hold it. This is not a day trade. You have to carry it for a few days. But I think there's money in both the indices.
Okay. Mitessh, good morning. How are you approaching the index today?
Good morning. So my take is that broadly, we are close to the supply zones of 10,400. So you might see some kind of stiff resistance come in, but the overall short-term bias still remains on the positive side. I would maintain a positive bias. In fact, in case we get a 30-35 point kind of a down opening, and which Ashwini said, typically doesn't look like we'll have a follow through. Then a lot of stocks which are reversing on the hourly charts could be on the buy list. So despite the fact that we have a negative opening, I have more buy calls on the stock side. On the index side, I think, as I said, I would want to, possibly book out in positions closer to about 10,400 on the Nifty and around 25,050 on the Bank Nifty.
Okay. Well, you're not alone in having more buy calls than send calls, Mitessh. That's the mood today. Ashwini, we'll start with you.
Yeah, Friday, these telecom stocks had a bad day. So Idea is a sell with a stop of 77, target of 70. Vedanta is a sell with a stop of 290, target of 275. DLF is a sell with a stop of 208, target of 196. BPCL meanwhile is a buy with a stop of 428, target of 450. And IGL is a buy with a stop of 290, target of 312.
Okay, lots of buys and sells. Sudarshan, good morning. What's on your list?
Well, the bias is towards buying, but I would prefer to look at mid caps because we are taking care of the large caps with the Nifty, and the Nifty itself is giving a sense of minor consolidation. So start with Bata. That stock has finished a minor correction. It's already on its way up and probably going to make lifetime highs again, as it's a buy for the day. Also, you can carry it. Escorts is a buy. Escorts has been outperforming, and that outperformance continues. So I would be a willing buyer in Escorts. The third is DCB Bank. While the larger banks are covered by the Nifty Bank, TCB has been making a trading range that converted itself into a bullish head and shoulder. There's probably significant rally coming in. Two quick short sells. Short selling should be done only intraday. Bharti Airtel, where the telecom story is playing out on the downside, and CESC, which is now coming and encountering resistance. So we are selling into what could be resistance.
Okay, so it's a call drop on telecom from all three of our experts. Mitessh, I think you also have a sell on Airtel, is it?
That's right. So there's some kind of a swing breakdown. It's made a fresh low on Friday. I think keeping a stop at 395, I would see more declines possibly to levels of 367. And post that, I have 4 buy calls. Equitas has given some kind of a breakout, so buy with a stop at 146, look for a 165 kind of a target. Federal Bank finally broke above that 95, half 96 zone. Now can be bought with a stop below 95.20, look for targets of 102. We've had some positive crossovers of indicators on KSCL, that's a buy with a stop at 506, look for targets of 540. And Tata Motors, and in fact, we've been very bullish on the stock last 3-4 days back when the breakout happened with the positive news flow. I think it will see some continuation. So buy with a stop at 355 and look for a 385 kind of a target.
All right, gentlemen, do stay on. I want to ask you all about the various sectors of the banking and the NBFC space. But before that, let us put the news on the table. Today, all eyes are on the bond yields because on Friday night, the Reserve Bank announced that foreign investors or foreign portfolio investors will be allowed to invest up to 5.5% of outstanding GSECs. At the moment, it is 5%. Anand Narayan, market expert, joins us on the phone line. Anand, there were some people who were even telling me that they were expecting the limit to be raised to 7%. This is 6% FY20. Will the market be disappointed or will it be just happy that there's immediate flow?
Hey, morning, Lata. I think it's a positive news.
Okay.
Even if the market was expecting 7%, I can't think of too many people who would be expecting it for this fiscal. You know, the RBI has never increased limits that rapidly. It's always been in increments of 0.5%. In fact, the discussions were about 7% by 2022 or so, and I think this is perfectly in line with that 0.5% per year going forward. Also, in absolute terms, the amount of space now available for this fiscal year across GSECs, both types of limits, is 59,000 crores of increase in limit. Plus, there is some room available and coupons. So it all comes up to about 78,000 crores possibly of demand coming in this year for FPIs in government debt alone. That's like 20% of the net issuance for this year, and that's a substantial size. So given all that's happened over the last few days, Lata, with the issuance size itself coming off, friendly voices from everywhere, from the government and the RBI, and now this expected FPI limit increase, I think it's all good and bonds should rally today.
Well, that was my next question, Anant. I mean, talk about good news pouring in, and let's not forget the policy itself. I mean, the inflation trajectory, the forecast being cut. But is all the best of this news in the price, or do you expect, maybe a move to 7, below 7, if at all, in the coming days, not just today?
I think a move to 7 is quite possible, given all the positive impulses that we've seen in the last few days. Having said that, I think there is enough room for caution. We've painted the best possible picture for the future going forward. And clearly there are risks, both on the fiscal front and to a lesser extent on the external front as well. Specifically on the fiscal front, both on the revenue side and expense side, one doesn't really know how things will pan out in an election year. And that can impact bond markets quite dramatically, going forward. But the problem with the risk is exactly that. It's a risk. We don't know how things will pan out. It could actually be as benign as the RBI and the MPC made it out to be. So one has to wait for data to come in and see how it plays out. I think at around 7%, if it does go there, you will see caution seeping in with things as they are. And you might actually see some traders and FPI reducing their positions at those levels, which might actually be the right thing to do given the overall uncertainty of the future.
Yeah, actually, just that one last question. The fiscal slippage that you're pointing out, the state government borrowing calendar is pretty heavy. So does that put a bit of a bottom in the sense 7.1 or something like that?
Look, the positivity on the central government side will probably prevail for now.
Okay.
You're right. The SDL issuance limit issuance calendar is pretty heavy. But this is an unmitigated positive, what you're seeing on the central government side. We don't know if this party will last for more than 3 or 6 months. The second half does look pretty murky, especially as you come closer to the elections. I personally would think between 7 and 7.1 one should reduce sizes. But it's a personal view, and it's going to be very, very data dependent.
All right. Fair point. And speaking of data, we have an inflation number coming shortly later this week. So yes, very data dependent. Thank you very much, Anand Narayan, for joining us. Well, before we get to our next expert, just one word from Ashwani. There was no NBFC or finance stock on your list. Any ideas?
See, the financials have positivity, but now, a lot of the short covering is done. So maybe the banks will again lead an upside, but that is when that happens. So for the moment, consolidation means there'll be some profit booking, etc. So NBFCs don't really have that sort of tailwind that they had for the last couple of days because of the policy. I think now everything consolidates before the next breakout.
Okay, on that note, we will take a break. You had that small announcement, a $20 million deal that L&T Tech has done, so that's another stock.
Now for some fundamental cues, Girish Pai, Head of Research at Nirmal Bang Institutional Equities, joins us. Good morning, Girish. Thanks much for joining. Well, does it look like a bottom is in place? Are you a buyer as the index moves towards 10,100?
So from a risk-reward perspective, I think it's kind of evenly balanced as things stand currently. I think we could probably see a 5 to 6% upside and possibly even a downside. So I think until the financials, which is a very large weight in the index, are out of the woods from a news flow perspective, I think the market should not probably see a fresh highs. I think concerns regarding inflation, though I think it's been partly allayed by what we've seen from the RBI recently, though I would think the market is still concerned about inflation, especially in connection with what could potentially happen on the MSP side and possibly crude, and also possibly higher consumption-related spending that the government could inject into the economy as we come towards election. So I think there is definitely an inflation-related issue that we're facing, which will probably come to the fore towards the second half of the calendar year. Plus, there is an asset quality-related problem which we don't have a handle over as things stand currently. We don't know what exactly the provisioning number is going to be like for fourth quarter, especially for corporate banks, and how that's going to pan out into first half of next year. Once we have a handle over these couple of, I think, macro points, I would probably think the financials will be ready to rally, and that's when I potentially see the market actually going up. From where the market is vis-a-vis maturity of the bull market, if you look at one-day cricket parlance, I think probably when the 40th over of a 50 over match. So we still think there is for some bit more for this market to run, but we're probably there. I mean, probably we're 80% through. Is broadly our view on where we are from a maturity of the bull market perspective.
Girish, it's interesting, we came into Q4 with the broad expectation that this is going to be the defining quarter. We'll finally start seeing good numbers. Interesting headlines, and all the papers today point out that it could be a far more sort of, measured approach, so to speak. What's your expectation from the earnings?
Yeah, so I think if you take out pockets of the market, I think they will still be fairly decent earnings coming through. If you look at, say, private sector banks and private NBFCs, if you look at the consumer sector, if you look at autos, I think these are pockets of the market where we think the demand is fairly robust and earnings picture looks fairly good. But I think there are other parts of the market which kind of would weigh down on earnings in 4Q and probably even in the first half of FY19, and these have to do more with the corporate banks and the asset quality issue and the provisioning situation that I talked about. I think that is a fairly uncertain number as things stand currently, and I think people are putting in various sorts of numbers. So that is a part of the market which will kind of push down the aggregate numbers, the index levels. So while we started the year with probably like high teens kind of a number from an index earnings growth perspective, by the time the year ends, my sense is we'll probably be mid to high single digit index level earnings growth, which means that the next year's earnings will start looking, earnings growth is going to look far more robust than it should normally look like. So my sense is that the number is probably going to look between 25 to 30% index level earnings growth, purely optical in the sense that we've seen a compression in FY18 earnings and with FY19 earnings broadly remaining constant, you will see this optical up move of earnings growth picture.
Okay, Girish, good morning. Of course, that's for corporate banks, but what about large cap IT? We'll have Infosys this time actually in, Friday evening, I think, and the stock was a bit soft, of course, on Friday. So what are you building in for large cap IT?
Yeah, so if you look at the aggregate numbers for large cap IT, we kind of think that earnings will be flat to maybe marginally down on a year-on-year basis. We probably think that's probably going to be the case even for Infosys this particular quarter. On a quarter-on-quarter basis, we are kind of building in about 1.5% kind of constant currency growth for the tier one set of IT services companies. I think the key thing to watch out for is the guidance they're going to give for FY19. Where we think that the company is probably going to give a guidance of 5 to 7%, which is, I think, at least 200 basis points lower than where the consensus is from where the consensus. Our concerns largely stem from the fact that we have a situation where the total contract value added over the last 12 months, ending December 2017, has been 25% lower than what it was the previous year. Calendar year, that is. And in terms of new deal wins, my sense is it's down about 40 to 60% under various scenarios that I've kind of built. So I think the guidance is probably going to be fairly soft, and that could potentially disappoint the street from a growth perspective, and which could lead to some pressure on Infosys. I think what happens beyond first half, I think, is something to be looked at. It all depends on what kind of scenario builds up post Mr. Salil Parekh coming in, and what he's able to deliver going forward.
Okay, well, actually on that issue, Girish, not just Infosys, generally is the IT pack something that you would chase at current prices from an earnings angle? What are you expecting?
So we changed our stance recently from being negative on the sector for almost 3 years to being tactically bullish. And the tactical bullishness comes more from a technical view standpoint rather than any fundamental change in opinion. So we changed our view largely because the sector has been underweight in institutional portfolios for a fair bit of time, and there is a modest uptick in earnings growth that one is expecting in FY19. I don't think that's going to continue into FY20. So we do expect some bit of revenue kicker coming in because of better US economy and better spending by corporates because of US tax reform related benefits. But looking out into FY20 and beyond, we think that growth is again going to come off. So we are not building a situation where this is a structural buy. We still think that earnings growth for the sector is going to be mid-single digit kind of a number, assuming that rupee doesn't depreciate very dramatically from where it is right now. So in such a scenario, we think it's at best a tactical buy at this point now, because the financials are under pressure. The very large weight in the sector is under pressure, and I think it'll continue to be so for the next 5 to 6 months. I kind of laid out the reasons why that particular sector is going to be under pressure. So it's more of a relative call. So we think that, yes, it's more of a trading bet, so to speak, right now, but not a structural buy.
Okay, it's really interesting you say that, Girish. You've tracked the sector for many, many years. Where does it leave some of the mid-cap IT high flyers? They've been the best performing stocks in this market volatility, the likes of Hexaware, NIIT Tech, etc. Is there a structural story there? Any mid-cap picks that you'd go with?
No, again, I'm a contrarian there. I don't believe in this the faster growth for longer kind of theme that some of my competitors are kind of painting for mid-cap IT companies. I think the faster growth is going to be there for maybe 1 or 2 years at the max. I think the mid-cap companies have vulnerabilities. Their business metrics are fairly, I would say, risky in one sense, because the client concentration is anywhere between 45 to 60% for top 10 clients. And we've seen some of these companies actually deliver negative surprises from a growth standpoint even in the recent past. For instance, say Persistent, for instance, came out and said that the IP revenues are going to decline fairly substantially in 4Q versus 3Q. So there could be surprises which are not factored into current valuations at this point in time. Street is building in a very strong growth sustaining over the next 2 to 3 year 2 to 3 year time frame, I doubt whether that kind of scenario is going to play out, because I don't think the business models are very differentiated versus the tier 1 companies. So I'm not betting my money on the mid-tier companies at these valuations. I think probably 6 months back they probably made sense, but not right now.
Okay. Well, Girish, we'll have to leave it at that. Thank you very much for joining us, and have a great trading week ahead. The first of your important companies will announce numbers before the week is out. I'm a little troubled when companies announce results or any announcement on a Friday evening. Which means, the first numbers may not look good, but please look at the fine print.
Exactly.
It seems to look like that.
And on Friday, the stock was down. And it's a 2-day board meeting. You thought that it will start on Thursday, and normally you would have thought that okay, Thursday it will start, and Friday morning they'll announce the number. It's Friday 4:30. So.
Okay. Well, there could be other strategies, but it's just a bad feeling when announcements come on Friday night, and planned to come on Friday night. With that, let's get you some F&O cues. Chandan Taparia of Motilal Oswal has joined us. Good morning, Chandan. What do you have for us?
Yeah, very good morning. Again, stock-specific action is likely to be there. Market has seen recovery of around 350 points from lower levels, and now 10,222 is likely to act as a support to extend the rally to a 10,440 kind of zone. Talking about the stocks, positive on the most of the IT company. We have seen the positive momentum and the price volume breakout. So first it is buy on Mindtree. The stock has given a breakout from its triangular pattern. We have seen the addition in open interest by 10 to 12% at the time of breakout, and delivery volume also jumped. With trading volume, that indicates the positive stance to continue, and stock has potential to hit the new lifetime high territory. So recommending to buy with a stop loss of 811 and looking for an upside target of 872 in next couple of trading sessions. Second trade, that is from Pharma Pack. We have seen the bottom out process in the Nifty Pharma on the weekly parameters, and here expecting some short covering and the bounce back move in Lupin. However, it has been a beaten down counter, but recently it has taken support at its downward falling channel on the weekly chart. We have seen the positive divergence on the price and the mechanical indicator. That also indicates that now the counter is turning from oversold scenario, and better risk reward ratio can be offered with price momentum. So expecting a smart up move in the counter, one can buy with a stop loss of 788, and it has potential to move towards 855 on immediate basis. Third trade, that is on the sell side, negative view on the Bharti and Idea. Bharti Airtel has broken the immediate support of 395, 390 zone, continuously making lower top, lower bottom formation even after the market recovery. That clearly indicates that weak structure of the sector and the stock. That's why expecting weakness to continue, one can sell with a stop loss of 395 and expecting it to hit the downward target of 365 zone.
Like Chandan, thanks a lot for those trading ideas. The SGX Nifty is almost in the green. It looked unlikely, as we discussed in the morning as well. Completely unlikely it looked like that you'll have a 40-50 point downtick at a time when Dow futures are up, the rest of the Asian markets are doing well, and